Hey everyone, welcome to this Chipstock Investor Live. We're glad you're all here and could make it today. Hope everybody's doing well.
Hey everyone. Someone give us a thumbs up if you can hear us. Okay.
Nice, awesome. Thank you very much. Okay, we'll get started here, but just as a reminder, you can use your digital hand and we will invite you to speak. Otherwise, we just have a couple of pre submitted questions. So today's going to be mostly you guys chiming in either verbally or you can always chat your question. That's totally fine too.
And before we take the first question, if just a couple of intro remarks, I guess. We've been doing kind of like this Q4 planning sessions every week for the last few weeks. And before we head into the fourth quarter of 2024, which starts on Tuesday next week, just a couple of things that we're expecting from a high level here. We got the Fed jumbo rate cut. They cut by 0.5%. Seems like central banks around the world are kind of getting on board with this overall loosening of monetary policy finally. That's great for a lot of businesses. It'll take some time to trickle down to consumers in particular. They're always late to the party. So we're optimistic about that for 2025. Of course, still very optimistic on the semiconductor industry for 2025. I think we've been saying that in pretty much every video and show note for most of this year. But for Q4 specifically, we are expecting a strong finish to the year for the stock market, at least for the US stock market. And we think big tech will continue to push that higher. Although we do think some select small caps will join in on the party. And there's two primary things that make us feel this way. The Fed rate cut is kind of a bit of self-fulfilling prophecy. And second, we're going to get elections out of the way. Just anecdotally from our data, we can tell a lot of investors are very distracted right now, as they usually are every 4 years, especially in the US during a presidential election cycle. Once that gets out of the way in November and a lot of other elections around the world are out of the way, people will kind of get back to work, whatever the outcome is. And we think we finish out the year strong because once that's out of the way, everyone's going to start looking at 2025 expectations. And remember, large cap especially, earnings growth for the S&P 500, earnings growth is expected to be 15%. That's kind of the baseline assumption, 14 to 15%, maybe a little bit higher, maybe a little bit lower, depending on which analyst you ask. That's kind of our expectation as well as a baseline for large cap earnings growth next year. And that's fantastic. And that will get priced in probably, we think, the last couple months of the year. So that's our overall outlook for Q4 after we've kind of taken in some data, especially from the Fed. We're optimistic. So no earth-shattering changes from us. We mentioned recently that we've been running it close to zero cash or at zero cash in our portfolio since the beginning of 2023. We took all our cash off the table and invested it, especially in the fourth quarter of 2022. That's how Chipstock Investor was really kind of born. And I think that leads us to our first question, pre-submitted question for the night, right?
Yes, this question is from GK, and talking about that having zero cash available for investment. He says there should be some cash at any point of time in investing to take advantage of some unreasonable declines. How much percentage should be held in cash? Is there a benchmark? And he says, I'm thinking 10% of your portfolio.
Great question. Thank you for that question, GK. I'm not sure if you're here. Hopefully you catch this, the recorded version of it at least. I'll make sure to at you so you get your reply. But I think this is hopefully a question that everyone is wondering about. Yeah, we have been running at close to 0% cash, and we don't have a benchmark per se that we just keep a baseline amount of cash. We've been running our portfolio for many years now, where we adjust our cash position based on our economic outlook. And hopefully by now you've caught what the primary indicator is from a macro standpoint of view. How do we adjust that cash? It's based on earnings growth expectations. And so during the bear market, maybe we had a bit higher cash, 10, 15%, maybe a bit higher. But as we were headed through 2021 and 2022, when the bear market got worse, we started looking at 2023, expectation that big tech was going to lead us out of the bear market. Earnings growth expectations turned positive. We took that cash off the table and we're running at 0%. Um, Now that we are 2 years into the bull market, we're starting year three of the new bull market. It's not a fresh, brand new baby bull anymore. So it makes sense to maybe start adding a bit cash back into the portfolio. So we add to our portfolio every month. We make deposits. We pay ourselves first and save money. Less of that will get invested progressively going forward. And then if we're looking to raise cash from within our portfolio, per usual, the first thing that we'll look at is raising cash by selling the losers. So hopefully you saw our announcement. We were selling UiPath. That was not a large position, so that all on its own is not going to do much to raise cash in our portfolio, but it'll all add up. So that's the next place that we'll look to raise a little bit of cash. And then second, if there are any stocks that are underperforming the market, we'll look at, are they expected to continue underperforming the market? If so, why? Is there something structurally wrong with the business? Perhaps we'll trim those positions next to raise cash. As far as an actual benchmark, I would say maybe at this point, sometime early in 2025, first quarter, second quarter of 2025, maybe 5% of our portfolio in cash. But we don't want to keep too much on the sideline. There's this thinking that you always have to have cash available. Let's say 10% is a rule of thumb that sometimes we often hear, pretty common. Maybe that's a good starting point to think about it. We don't buy into the thinking that you have to have that cash as a benchmark just to take advantage of the dips. The reason being is by the time you actually get a dip in a stock or maybe an index that you're interested in, the price after the dip might be higher than when you originally considered investing it in the first place. I'll just give you an example. Let's just use an ETF because it's easier than cherry picking individual positions. VGT, a Vanguard IT ETF, a year ago, it was just over $400 a share. There would not have been a greater than 10% dip in that ETF until July, August. And by the time there was a 10% plus dip, that dip was 25% higher than the starting price a year ago. So simply just holding cash in hopes that there's a dip, we don't believe in. Cash serves a very different purpose in the portfolio. It sort of can balance out performance. Yes, for individual stocks are much more volatile than an index. So maybe you want to have some cash available to buy the dip on individual stocks, but having the cash just because you expect there to be a dip, and for no other reason other than that you hope there's a dip without any extra research beyond that. I'm not sure we quite subscribe to that thinking. Also affecting our outlook is again, we're net savers every month. So that may not be everybody's situation. And so your time horizon based on when you need the money is going to play a factor in this as well. So I'm speaking for ourselves here, for Casey and I, but that's where we're at as far as that outlook goes. Okay. Sorry for the long-winded response, but that was there was a lot to that question. Hopefully I got it answered in a satisfactory way. Okay. Anyone want to join the stage, ask a question, make a comment? Yeah, here we go.
All right, go ahead, Liam.
Sorry, how's it? Can you guys hear me?
We can hear you. Go ahead.
Thank you both for hosting this. It's always great to come on here. Just a question around Twist Biosciences. I watched your guys' video. Is it okay if we dive into this for a quick second?
Yeah, absolutely.
Okay. So I'm just trying to run it through my head, and I've modeled out Twist before, but I wonder if I'm getting my assumptions wrong. So as you know, like SynBio or SynDNA business is really tough because all the pricing power comes from massive orders. And so the last quarter they did, I think it was like, well, the gross margin was 41%. And I know that they've been forecasting to try to get into the mid 50s, but I'm trying to think of it from a value standpoint. If you assume that the business does 709 million in revenue in 2029, and they like work their way up really aggressively to a high 50% gross margin, let's say 56%, that would roughly be like 45 to 50 million in EBITDA. And then if you basically calculate the unleveraged free cash flow, that'd be roughly 68 million, I feel like, for 29 based on my assumptions. And the Syn Bio EV to EBITDA comp is really high at 26 times currently. But I guess even if you divide that by the shares outstanding to get to your equity value, once you calculate enterprise value, I get to like $27 a share. So I'm just trying to figure out, like, is there value that I'm missing here? I don't know what you guys are seeing on your end, but I feel like if you just calculate, because they're spending so much in CapEx on their data center, they have a lot of maintenance CapEx. It's really hard to grow the margin. So I'm just wondering
Mhm.
if I'm missing anything on actually them being able to generate free cash flow without having any future dilution.
Casey is shaking her head vigorously at me, so I guess I'm gonna answer this one.
That was a lot of numbers, Liam. You have
Sorry.
definitely
Sorry.
done no, no. No, don't be sorry. You've definitely done your due diligence. I think ultimately I agree with you. You're not missing anything, and I think that's the reason that we passed on this, at least currently. Go ahead, Nick. You
Okay.
can.
Go ahead, Liam. Go ahead, Liam.
No, I agree. I was just wondering, I think this is one of those things where it's been somewhat inflated because I know Kathy Wood's ARC ETF, this has been their like number one holding for the last 10 years. And if you look at some of the other SynBio comps, like Ginkgo is basically down 90% since inception. And I just wonder if I feel like there's a lot of hype around synthetic DNA, especially in the sense that they sell 50% to healthcare. And then I think it's like 20% goes to um, academia. So
Yeah.
I, I, I feel like this is one that like there's a lot of excitement around, but
Mhm.
like 26.6 times even EBITDA comp is really high. Like even for semis right now, that's egregious. So I didn't know
Right.
if I was missing anything or if you guys have anything to add on.
I think it's a really crowded space at this point. I mean, it's a very valuable business, and it's a very valuable service to especially research and development of new therapies
Yeah.
for, I mean, all kinds of stuff, but they're not the only ones doing it. It's I think the idea behind the having it printed on a silicon wafer is very exciting and has a lot of promise, especially with the possibility of DNA storage, but again, they're not the only ones that are doing that either. Some of the larger players like, Seagate and Microsoft are both working on DNA storage as well, so they have a lot more money to throw at that, so
Yeah.
it's yeah, I think you're right. Not to say that it won't do good in the future, I don't know, but at this point, it seemed like it was, overvalued for us.
Perfect. Well, thank you.
And the
Sorry for
other
the side going.
Don't be sorry. No, thanks for the question. Go ahead, Nick.
yeah, and, Casey was doing the research on that one because that's healthcare is her forte. That's an industry she knows, and as you probably know by now, I've made some terrible picks in the past, within the healthcare sector. Um, one of one of the things that I guess I've come to realize, and that Casey's really reinforced since she's come on board with helping with the research on all of this, is that in the US in particular, which is far and away the largest healthcare market in terms of annual spending every year, it's a tough market to break into if you're not getting insurance money.
Hmm.
The R&D space, it's not that it's small in healthcare, it's massive. I don't know what the number is, but it's probably hundreds of billions a year
Oh
getting
yeah.
spent by big pharma and biotech on R&D. So it sounds like one of those stories that a Kathy Wood ARK Invest could spin as being, oh my gosh, this is such massive potential. But the problem with that, in my mind, Casey's doing the research. I'm looking at this, and the first thing that pops in my mind is, okay, but how do you capture that when you have so many
Mhm.
companies all attacking this from exactly the same angle? And the answer is you virtualize all of it, which is what NVIDIA and the entire semiconductor and computing industry are hard at work at right now. So where does that leave all of these startups trying to go after those R&D dollars? I
Yeah.
don't know. I think they, from here on out, I think this is why like our, kind of our next segue in research has started to move towards health tech. Seems kind of weird for a channel for a research service called Chipstock Investor to kind of make this like maybe a very, very soft move into health tech. But I think that's the reason why.
Mhm.
Um, Computing technology has gotten so powerful and so good at virtualizing things and creating synthetic data from nothing, virtualized data from nothing without ever having to come up with the DNA samples, for example, in this case. I don't know where that leaves companies like Twist in the future. That's
Yeah.
my biggest question. When she was doing the research, that's the first question I asked was like, well, who Twist lists all of these competitors in biotech, but what about the biggest competitor of them all? It's NVIDIA
Yeah. Yeah.
and analog devices. As the more we dug into it too, I think analog devices is more than happy to sell to Twist and everybody else that wants to do the same thing. They're not going to make an exclusive deal with Twist. Absolutely not. They
Yeah.
developed the tech. Why in the world would they make an exclusive deal with a startup like that?
Yeah. Uh, not to, I don't want to hog the screen for too long. One other
Go
question,
ahead.
Casey.
No, keep going.
Okay. Casey, anything else you're seeing in the healthcare, biotech, med tech industries that are interesting? I mean, I feel like it's the sector where I'm spending the most of time or most amount of time looking because there are so many companies that have just gotten beaten up in this macro environment that are trading at like less than cash. And I don't think for the time that I've been investing, I don't think I've ever seen anything like that in a sector. I mean, the XBI, which is the index that basically tracks all mid cap biotech, is basically up like 9% this year, while the rest of the market has done fairly well. Is there anything that you see that has some value or some exciting plays in the clinical program?
The next one that I'm looking at, actually, Blackjack just pointed it out in the chat, is Vertex. And I was started to seeing Vertex come up when looking at CRISPR therapeutics.
Mhm.
Um, Vertex partnered with CRISPR on developing that cat.
Yeah, Exocell for gene therapy, sickle cell.
Exactly. That company, they've primarily been in uh, cystic fibrosis medications. Then now they have the sickle cell disease, but now they're also going into diabetes type 1 as well as neuropathic pain, which both of those
Mhm.
obviously have a much bigger market. I know, like for instance, cystic fibrosis, I think worldwide they say maybe 70,000 people. But I mean, everyone has, and I shouldn't say everyone, but a very high number has of people have neuropathic pain,
Yeah.
and diabetes type 1 is in the millions.
Well,
So that's an interesting one. I'm still looking at that one.
yeah.
I also just read an article about some patents getting uh, deleted from the two founders of CRISPR, from Charpentier and Doudna. They have some European patents for the CRISPR technology that they're actually just going to revoke because of
Mm.
some European Union uh, rulings. Yeah, so that might have some a good it might have some good effects for Vertex. But I should have that out by the end of let's see, at the beginning of next week. So that's one I'm looking at really closely right now, Liam.
Sweet.
And
Awesome. Thank you.
I might just add, Liam, because you mentioned something. A lot of these companies trading for less than cash.
Yeah.
Yeah, there's a lot of what appear to be deals out there, and I do wonder if this is a story that the media hasn't caught on to yet, and they will at some point. But
Yeah.
I think the market is discounting a lot of these because of what the semiconductor industry is starting to do for the medical field. I
Mhm.
mean, we've been talking about like disrupting the status quo in healthcare and treatment development for as long as the healthcare industry has been a problem in the United States, which is a
Yeah.
long time. And it's
Yeah.
never worked because it's basically trying to take traditional methods and try to make it better, and it doesn't work. And then there was the whole e-commerce thing that, claimed to maybe, do the Amazon of healthcare there at the end of the 2010s, and then especially in the pandemic. And it's just, we ran out of steam. This kind of coincides with the reason why we started a semiconductor channel is during the pandemic, the bull market comes to an end, the cloud computing market comes to an end, and a lot of investors were like, "Hey, the next big thing is going to be infrastructure," and a lot of
Mhm.
those folks gravitated towards traditional infrastructure, um, oil, transportations, old stuff, which was really dumb. They were on the right track, but like, why would we go to an old sector of the economy and say that's going to be the next leader of the bull market? That never happens in
Yeah.
capitalism. It's not how capitalism works. Complete misunderstanding of how it works. The infrastructure that was going to get the attention, and it was always going to get the attention, was information technology. We ran out of steam. New technologies were coming to market that greatly amplified what we could do with data crunching. And so now it's happened. And one of the first places that we're going to squeeze out new profit from is, of course, one of the biggest, if not the biggest, spending areas of spending in the economy and healthcare. I mean, the trillions of dollars that get wasted every single year is just staggering. And it gets captured by the insurance companies, which is a sucky place for everybody to have their money captured when you need treatment. That's, I think, one of the big reasons why Wall Street is not talking about it yet, but they have absolutely bludgeoned so many of these companies, is because there's a lot of worry quietly behind the scenes that the semiconductor industry, computing technology, you name it, all of those companies are coming for healthcare. They finally have the
Mm.
tech that they've always been looking for decades to finally crack into this market.
Yeah.
And so I think that's maybe one thing. There's a lot of deals out there. Uh, some of them will emerge in hindsight as, wow, that was a killer deal. How did we miss that? Some of them might be a value trap. Like,
Mhm.
for example, Twist,
Yeah.
just because of the level of disruption that is coming for the healthcare sector.
Yeah. No, I agree. It'll be interesting to see how some of these AI companies, like for instance, NVIDIA, I saw when they announced the new Blackwell chip, they did a little snippet on they have an AI tool that's going to help with drug discovery and compound construction. I mean, that's going to change the world of biotech, and that it'll certainly be exciting to see.
Yeah.
Before I go off, one thing I wanted to say is there is a company I think you guys would both be interested in. You might have heard of it. It's based in New York City, called DocGo. They're basically like the Uber of medic. They have they go to your house and there's a doctor that'll come. They'll do an X-ray at your house. All these checkups. They're doing close to 600 million in revenue, and they've had some battles at the New York City. But I met with the CEO last week, and I think it'd be something you guys would like because they're all mixed between technology and biotech. But just just something. So
Liam,
appreciate the time,
did you
guys.
say .go?
Yeah, DocGo.
DOC?
GO. Yep. The ticker's DCGO. They have a
Okay.
lot of really exciting growth and they trade literally below cash. They're profitable, micro cap. I mean, I think that I've never seen anything like that before. I mean, that's
Yeah.
going to be something that's going to explode, in my opinion.
I need to check my notes. I'll
Yeah.
look through it, but I'm pretty positive when did they IPO? Was it during the
Oh,
whole
well, they went public through SPAC long
Yeah.
time ago. So they were, one of the SPACs that just stood there at like $10. And
Mhm.
then there was the CEO, the old CEO had a rough go. He lied on his resume and said that he got an engineering degree from Clarkson. And so there was a short report that came out that basically said he didn't get the engineering degree. Stock went down like 60%. And then the New York City, they had a massive contract with New York City for migrant transportation. And so they lost that contract with New York City because of all this stuff going on with immigration. But they have a really insanely strong business model. They're in only like 10 states out of all 50, and they're strongly growing. They're building massive contracts with these hospitals that are paying them like non-gap close to like basically $1,000 per patient. So, and they're growing really fast and they're really profitable. Like they're going to they did, I think what, 40 million in unlevered free cash flow in the quarter. They should do more as they get positive contribution from working capital. So it's going to be exciting. So just maybe something to keep on your radar. I bet you guys would be interested if you did a deep dive.
I do remember this one now. During the SPAC process, I did look at this one. We
Yeah.
passed at the time, thankfully.
Yeah. I don't blame you.
I don't have to I don't have to add that to the long list of healthcare investment blunders. Um, I think so, who asked just also about Outset Medical. I just I just saw it. Teo?
Yeah.
No, that
I'll
was
head
another
off so
one
you
we
guys can
passed on,
go. Well,
Teo.
appreciate you guys answering the questions.
Yeah, thank you, Liam.
Yeah.
Thanks for joining the stage as well. We appreciate that.
Yeah,
Of
and
course. Thanks,
please feel
guys.
free to suggest any companies in that healthcare channel. We'll take a look when we can.
Yeah.
I see RX and or sorry, Stanek mentions Recursion and Ginkgo as well. Recursion is another one that's a partner with NVIDIA, actually. So that's
That's on Casey's list.
that is too.
Uh, Ginkgo's a hard pass. I think Casey briefly mentioned that in the write up on Twist. It's a Twist customer, really. So it's like if you don't like Twist, I'm not sure what would make Ginkgo investable. But that's just I think our take. Let's see. I missed something here. Okay, so Teo, you asked about Outset Medical. No, we've never invested. Blackjack, do we ever short stocks? Yeah, we have in the past. At this point, we have not for a few years. Maybe we will at some point in the future as part of a hedging plan, or if we ever get to some point in time where the market is like widespread, just completely out of line, overpriced, perhaps, maybe. But yes, we have shorted stocks in the past. Of course, if we ever do or plan on doing that, we'll say that. We'll say so here. We have the freedom to talk about that now, where in the past maybe we did not so much have the ability. I think the last time we shorted stock actually was I think we shorted pot stocks a number of years ago. 5 years ago, I shorted bet against a pot stock. It was it was a weird time. Okay. Uh what else?
Okay, we can go to a kind of a fun question from Teo. What are the most annoying questions or comments on the Discord channel and YouTube?
Other than are we robots? Well, we've already answered that question. We are. The cat's out of the bag.
I think maybe I would say this doesn't happen on Discord, but on YouTube, every once in a while we get a question or whether or not we're related. Like if we're brother or sister, I think that's easily the most annoying comment for me.
We're Jack and Meg White. We're going for the same type of mystery.
Okay, go ahead.
Um, let's see. On YouTube, I feel like we get a lot of questions. Actually, I would say 90% of the questions that are like actual questions, we oftentimes get them on the video where we just answered the question, which is a dead giveaway that no one ever actually watched the video. Um, I don't think that's happening on here on Discord, but if it is, please, everybody, I think that's the biggest thing that we offer here on the channel here is access to our actual notes on our research. Check those. I think we're giving some pretty good detail on here, but yeah, check the notes and the threads first, and then Casey just had to step away. Everybody, sorry. So I'm going to answer another one that she, when thinking about this question, had put down. Um, do use the search function on Discord. It's actually pretty good. It's like a little internal enterprise search feature. So if you're wondering if we've covered something in the past, I know that these channels are getting quite dense now. A lot of stuff is getting buried. Use that search feature if you have a question. See if there's an answer somewhere first, and if it's not, fire away. We do appreciate the question, but we personally are actually not robots. We're not an AI chatbot. Uh, we're kidding about that. Obviously, the search feature would be helpful for us if you could use that first. Thanks for that question, Teo. Okay, let's see here. I'm just going to take a moment. If anyone have a question, if you want to jump on the stage here with just me for the moment. Actually, I'm sorry. I just noticed there's some questions over on the questions for CSI Live channel. Virtual unknown. Are we planning to participate in the energy, in quotes, or energy sector as it relates to data centers? Recent news with Constellation Energy and their partnership with Microsoft reopening the plant at 3 Mile Island again raises the question of what will be the type of energy to power these data centers that have massive power requirements. Nuclear, natural gas, and other combinations have been discussed as solutions. Yeah, we have been all along participating in this more in a roundabout way, though. We have Berkshire Hathaway, of course, has a very large energy portfolio. We also have APD, Air Products and Chemicals, which did exit natural gas, but does have the hydrogen bit to the business still. Seems like they're doubling down on that. And then the power chip companies. We really, really like picks and shovels for the energy sector at this point. So I would say, I think you're probably asking Virtual Unknown about actual energy sector stocks. And we don't personally have any plans on that. We would much rather invest in the semiconductor companies that are helping make the energy sector more efficient because they will gobble up most of the profit on that work. Good question. Pause here for just a moment. Okay. I see one. I'm going to jump back here. I'll come back to the questions for CSI Live in a moment. But Liam, you asked about Wolfspeed and Navitas. Are they doomed or could there be some upside catalyst in the future? I think we're of the opinion that Wolfspeed can survive, but they bit off way more than they could have ever possibly dreamed of chewing on. Multiple greenfield fab projects, brand new fabs from the foundation up for such a small business was an absolutely ludicrous assumption for them and for the market investors to think that they could actually pull off. But they're paring some of that back now. Hopefully not too little too late. Navitas, I don't know. That one just seems really weird. One of those weird ones that popped up during the pandemic, got overhyped. Uh, they really kind of hid a lot of what their actual potential was behind a lot of smoke and mirrors. It's just really hard for us to get excited about power chips for smartphone chargers. So I don't know if it's doomed or not, but I see very, very little value there from Navitas on its own. But we've been wrong before. Glad we're fun robots too, Mark. Thanks. All right, let me jump back over here. Barb, I see you asked a question. Analog devices. We mentioned analog devices in the Twist discussion. What do we think of it as an investment, or does NVIDIA hold all the cards? Yeah, that's thanks, Barb. That's an interesting thing to think about. What we like about analog devices is that it's not exciting and it doesn't trade at a crazy valuation. I don't think it's one that we're personally going to purchase at this point. I don't know that it does anything for our portfolio personally, but it's just a fantastic, slower but steady play in semiconductors. They're profitable, seemingly no matter what the economy does or what the semiconductor industry does. And because of, as the name obviously implies, their analog technology is able to convert real world signals like what's happening in a DNA sample, for example, and then translate that into some sort of digital signal that's usable by a computer. They're kind of the dominant player in that. And that gives them a lot of ability to participate in pretty much every sector of the economy without having to like risk starting that business themselves. For example, Twist is obviously a high risk type of business, losing a lot of cash. But for analog devices, it's probably a profitable business for them to run synthetic DNA and synthetic biology. Um, so I think there's use for analog devices that analog to digital technology is not going away. NVIDIA is kind of a very different, all digital type of business. All they do is digital. They don't do anything analog really. And so what they're doing, I would say, is very different from analog. So I would say kind of complementary. There's going to be very much a use for both types of technology for a very, very long time, both analog and all digital computing. Good question. Let's see here. Stanek, Navitas lottery ticket. Yeah, I think we agree with that. Maybe you throw a couple bucks at it and then pray. I did, yes. Sorry. Uh, Casey's back. Stanek, in your opinion, AMD can grab some market dominance from Nvidia. What's our opinion? Uh, no. I'll just repeat what we always say. There's no catching in technology. Companies can kind of ride the wave alongside the pioneer, the dominant pioneer of a new industry, but there's no catching up. That's just not really how tech works. Companies that catch up, if I can, or grab some market dominance, it's usually because there's been some sort of fundamental shift in the underlying technology, but never anyone that just simply very easily catches up. One of two things always has to happen. Either the dominant pioneer has to really, really make multiple mistakes and just cough up the lead, like Intel did, losing its manufacturing dominance to TSMC. Multiple mistakes over many years is the reason why they lost the lead and gave up market share. Or the technology just completely shifts out from under them. Um, this is a very similar discussion that happened during the very early stages of the last bull market, 08, 09, in the ugly aftermath of the great financial crisis. Apple emerges as this darling of the new economy with the iPhone. And everybody always at that time was talking about, okay, someone's going to catch up. Here we are 15, 16 years later. No one has ever really caught up to Apple. Um, Apple has continued to be very dominant. A lot of companies like, you know, copied Apple and have rode the wave of success, but no one's like grabbed share away from Apple. If anything, Apple has continued to strengthen its market share over time, by expanding its know-how into new parts of consumer electronics. I think something similar happens with NVIDIA. Nothing against AMD. I think they can continue to do well, but there won't be any like catching up where they just grab market share away from NVIDIA. It's not that easy. Thank you for the question. Uh, let's see here. Did I miss any questions?
Anyone would like to ask a live question, please feel free to raise your hand and we'll get you on stage. Or you can always type your question in the chat. We have about 15 more minutes. Blackjack, thanks for the question. What do you think of Meta and its role in AI?
One of the world's most powerful computing companies. Um, we just kind of quietly chuckled and laughed for years when a lot of people said Meta is just an advertising company, a social media company with zero realization whatsoever that they have one of the largest fleets of data centers in the world. Uh, because they have that, and now everybody has suddenly come to that realization, that epiphany, that Google and Meta are perhaps two of the world's most powerful computing companies, AWS, obviously, in that mix as well. Uh, yes, that sets Meta up to be a very dominant player in AI for years to come. Whatever direction it ends up heading, obviously they have they have their own unique take on it. They're trying to funnel a lot of that AI work into their own advertising business to make ads more profitable, uh, to get users of their apps to watch the ads and help their those that spend money on ads on Meta's platform to get positive return on investment themselves from those ads. That's where a lot of that AI has gone thus far, but it's starting to pop up more into the user experience, and then obviously the metaverse part of the business. There's I can't remember who shared the CNET video, the 12-minute recap on Meta's event yesterday. That was good. Um, Lots of just gradual, incremental advancements, I guess, in AI. That's going to be the way this goes, and Meta is going to be a leader in that gradual development. We're happy to own it. We don't talk about Meta very much, but yeah, we're happy shareholders. Maybe not happy Meta users, Meta app users necessarily.
So, I like
That's true. WhatsApp. Yeah, we're happy WhatsApp users.
and you use, the I don't even know what it's called, the Victoria
Quest 3.
Quest 3.
That's cool stuff. Okay. Glasses and wearables. Yeah, it's going to take a long time. It's That's exactly what I was talking about. It's going to be gradual development. There's not going to be any overnight um, breakthrough. I think that was the hope with Apple's um, Vision Pro, and it's we're well beyond smartphone technology at this point. In the little write up we did on our secular growth trends, one secular growth trend, it's kind of nebulous sounding, but mega projects. Mega projects are now a secular growth trend, have been for a couple of decades, and it's only going to get worse. And what we're actually talking about when we say mega projects are things like this: developing headsets and glasses. It takes billions and billions of dollars of R&D to get stuff like this across the finish line. Same with self-driving cars, robotics, generative AI. All this stuff is just it takes lots of money, and the end results are almost always guaranteed to be less than what's promised. But the money is going to be spent anyways because the future market potential is so massive. And it's an environment, unfortunately, for better or worse, favors big giant tech companies with really, really deep pockets. David, yeah, we will post this. That we have a recording going. This will be posted. Thank you, Blackjack, for that last question as well. Okay, Isaac, thank you for the question. Can you go into more detail in the AI storage front, the difference between Micron and Pure Storage as key players? Do you want me to? I guess I'm just going to keep talking. Sorry, everybody.
I got distracted. I apologize. We have somebody working here on our apartment, and the dog is going crazy. I apologize for the unprofessional Q&A.
Okay, so Isaac, I'll refer you to our semiconductor industry flow. If you pull up almost any one of our show notes, it's usually there close to the top of the show notes on the industry flow. They are Micron and Pure Storage are in completely different quadrants of that industry flow. Micron is an IDM. They design and manufacture memory chips, which are a basic component, a basic, let's call it a key ingredient in a recipe, in a larger recipe. Memory chips are one of many ingredients to make an overall computing system. Pure storage is like the chef that develops the recipe and then goes out and gets a bunch of ingredients and cooks up the final product. So they're completely different business models. The reason why we've kind of given up on Micron after owning it for quite a number of years is the more we've kind of thought about the industry overall, Micron in context of the whole semiconductor supply chain, it's just not in one of those critical bottlenecks in the industry where they can consistently accrue most of the profit. They're going to have a year or two where they can get massive amounts of profit when there's not enough supply and too much demand for memory chips. And then there's going to be a year or two where there's way too much supply and not enough demand. And in those periods, they generate little or maybe negative profit. They lose money. Pure Storage, the way they've developed their business, uh, developing those AI storage servers. Let's actually zoom out. It's not just AI servers. They just do servers. They do storage servers in general. AI servers just being one new type of recipe they're working on and hoping to sell. Typically, developing servers can run into the same problem as Micron. You have good years and you have bad years. It's hard how to turn it into a service. So companies can choose to either buy the server from Pure Storage outright, or they can rent it in the cloud. They also have lots of software that they bundle with those servers and with the subscription. And they've turned the whole thing into a very sticky product because they're constantly upgrading what they're able to do, which makes perfect sense. Memory chips constantly improve every year. Companies like Micron figure out how to cram more bits of memory in the same size chip. But Micron has the problem of they can't necessarily charge more for every extra bit they cram into that chip. Pure Storage can because of the way they've built their business model. So that's why we've opted to go for the more slow, at the moment, slower, but steadier investment. And Isaac, I understand where this question is coming from because right at the moment, Micron is growing 60% plus year over year. Pure Storage is growing only at 10% year over year. But do bear in mind that a year ago, Micron was in year over year decline and losing money, and Pure Storage was actually still growing. So you have to kind of zoom out and look at the bigger picture on these companies. It's not just we didn't make an investment based on this particular point in time. We made an investment based on the bigger picture and what we think will happen long term. I hope that I hope that makes sense.
Okay, thank you, DB, for your question regarding AMAT or applied materials. Will it follow NVIDIA in the ups and downs?
Um, hey DB, we've got a lot of material on on applied materials. Um, let's see. No, it's not going to just simply follow NVIDIA's ups and downs. That's the simple question. Applied Materials is a generalist. They did a fantastic job these last couple of years of pivoting back and forth to whatever part of the semiconductor industry was offering the most growth and the highest returns. And that's the beauty of them being a generalist. They can continue to do that. It's not going to follow the ups and downs of NVIDIA. It will more closely follow the overall ups and downs of the semiconductor industry overall. However, as the semi industry gets more diverse and the end markets increase, earlier in the call, we were talking with Liam about health tech. It seems like semiconductors and computing technology have finally advanced to the point where real disruption can happen in healthcare and development of health tech. As those end markets diversify, that's fantastic for applied materials because perhaps it won't be stuck in that really vicious up and down cycle that the semiconductor industry has been stuck in the past. That's not what I'm not saying is that it won't be cyclical. Don't I hope that I didn't confuse that answer, but um, what I'm saying is applied materials is a big giant generalist and their ability to address lots of different end markets for semiconductor technology decouples it a bit from NVIDIA's cycle. Not at all the same.
Awesome questions, everybody. Thank you. Anyone have any live questions they would like to ask before we finish up? You can type your question in the chat or raise your digital hand and we'll get you talking live. David, I saw you went out on a limb and bought a couple of shares of Super Micro. I don't know, man.
We hope it goes well for you.
Hope it goes well.
We're not shorting Super Micro. Never had an issue.
Just two shares. Okay.
Fair enough. Hey, Barb. Uh, um,
Hi, Nick. I have another healthcare related question. And that is, uh, uh, Cadence Design. Uh, Earlier,
Yes.
you and Casey had looked into Cadence Design as, a design factor in healthcare applications, and I wondered, uh, what you've seen lately, and what do you think of how do you think of that as a piece in the healthcare semiconductor, uh, movement that's going on?
Yes. Great question, Barb. Thank you. Casey is looking up the name of the acquisition they made. Um, Neither of us can think of what it's called. Yeah, I know it's computational fluid dynamics is the technology they're working on,
Oh,
CFD, which is a ridiculously hard computing challenge. Just a ton of computing power is needed for CFD. Um, and there's big overlap with development and discovery of new drugs and treatments. An
oh,
eye
that's
was
curious.
called.
How does fluid dynamics tie into drug discovery? I'm fascinated.
Yeah, it probably depends on what the discovery is or what the research is specifically, um, and what part of the R&D chain is being worked on by a researcher. But I know they're related because what they're trying to do is, for example, this open eye, they're trying to figure out how to simulate the folding of proteins and like the
Oh,
structure of proteins, just as an example, which is kind of like a fluid looking process. And it's all like kind of vector analysis and machine learning, trying to predict, the way these things fold and move to make the right combination. I'm probably trying to address something that's way above my pay grade, so I should probably stop.
well,
But
it's way above my pay grade too, but I think that relating it to protein folding really clarifies a lot.
okay, I hope I'm not off track here. But if you do search open eye, all one word, or cadence open eye, it's a really interesting direction Cadence has decided to go. It's a bit different from Synopsys, which has taken things a bit different, a, d- a different direction with the pending Ansys purchase. And actually, our next video I think we'll have out tomorrow, Friday, is about Synopsys and the pending acquisition of Ansys. They're going the electrical mechanical convergence direction.
Uh,
So the classic example is the car. Okay, how do we cram more chips and make them work seamlessly with the mechanical systems of a car? Also a big problem, but a very different direction than, hey, we have all of this computational power for chips. Can we actually extend that to drug discovery? That's the way Cadence is going. So it's super interesting because, yeah, it's another digital solution that could potentially disrupt healthcare. And the nice thing about Cadence and even NVIDIA for that matter, rather than just playing this kind of old tech game where it's like we want to disrupt the industry status quo, they're making tools for the industry participants that exist now to purchase and maybe augment or completely change the way they do R&D work.
I think,
that-
yeah, well, the way I think about this, Barb, is like everything currently, or at least in the past, has to be done by hand, essentially, with very physical products. Of course, there's been obviously computing systems that work on this stuff, but with with things like this Cadence OpenEye system, they can simulate all of this R&D work. They don't have to use these physical products. They can simulate and see what the outcome will be without having to go through this process, or have a machine dial in all of these calculations and see what'll happen.
No more trial and error.
Exactly.
Let the computer.
Less of it. Yeah.
this is fascinating because in my mind I'm trying to put together a little basket of stocks. Excuse me, that would relate to maybe what you're seeing coming in healthcare? And it seems like maybe Analog Devices, Cadence, and NVIDIA, but what are there other stocks that you would put in that basket?
Specifically for like technology companies that make tools for
For
R&D and
for
healthcare.
healthcare, yeah,
Okay,
yeah.
let's see. Mm, I guess Skywater Technology is the one that we landed on last summer. We were doing a little bit of research on Quantum Sci, a startup that has uh, not done well at all, surprisingly.
Mm.
And in doing the research, we made the connection before it was publicly announced that QSI was actually working with Skywater in development of their platform for proteomics. So that's another one. Skywater is not an established business itself per se. They're still kind of homing in on break even, maybe getting close to turning a small profit within the next year or two. But so that would definitely be small cap basket stock that's definitely a bit on the riskier side, but that would be another one that very much participates in this market
Oh,
as well.
how
And there's
about
probably others as
recursion?
well.
How about recursion? Would you put that in there?
Yeah. Casey is working on recursion as well. I think the next one, I'm sorry, she just had to step out again. I'm really sorry, everyone.
Mhm.
She's going to have Vertex ready, I think, next week. And I know recursion. Oh, I can look at our schedule here. I think recursion is the next one she'll be working on, and we're trying to have a couple of those out before earnings season hits us again in October, um, second half of next month. So recursion, I think we'll probably have something out. She'll have something out on that in the coming
Uh-huh.
weeks for sure. It's a that's a unique one. Actually, Barb, while I'm thinking of it, I'm gonna when we get off the call here, I see that it's been just over an hour. We actually had listened to an NVIDIA podcast with Recursion's CEO and co-founder
Oh,
about a month or
I've
ago.
heard that one. That
Oh,
was excellent.
yeah, super interesting, huh?
Yeah.
It's yeah, unique business model, and that they're just kind of building this big data center basically for virtualization of data and R&D in healthcare. So it's maybe kind of an ancillary play on NVIDIA because that's who they're buying all the accelerated computing systems from to power their data center. But it'll be interesting to see what they are able to develop specifically for healthcare R&D with that data center.
Thank you so much. This whole area of healthcare R&D is just fascinating to me, and I'm looking forward to seeing what you and Casey put out on it because I think you're right. I think that's probably a big piece of where things will be going.
We think so, and in the Twist show notes that Casey put together under the healthcare channel here, um, she wrote in there, and we probably understated it. Kind of the old way of doing healthcare, like to really get paid as an investor, you needed insurance money, and it was really hard to ever like hit it big with an investment if all you ever got was a small slice of the research and development pie. The beauty of all of this new technology coming from the semiconductor industry is that they may finally flip that. It's going to be a small gradual process if this works out, but maybe the tables turn and you don't need insurance money anymore to get paid in healthcare sector disruption. Maybe a couple of companies can kind of start to change the status quo by disrupting the R&D process rather than trying to address the healthcare consumer product and trying to get through the gatekeeper, the insurance company. I mean, that's ultimately the problem with healthcare. It's captive money. Once it goes into the healthcare system, it's stuck with the insurance company until the insurance company says, "Yeah, you know what you've developed is worth is worth the money and we can still turn a profit by giving the go ahead on this. And, after it goes through the FDA, of course, it's just a really tough sector to disrupt, but maybe technology can attack it from the R&D side versus the product and market fit side. I hope
Well,
that
thank you
probably
so
make a lot of sense. I'm sorry.
thank you so much for doing this because I'm really looking forward to what you guys are going to come up with, in the coming months on this.
Well, I hope we come up with some good stuff that is worth everyone's attention.
Thank you.
And thank you for the question, Barb. Appreciate it. Okay. Hey everyone. Thanks again for showing up. Been a great session here. We appreciate it. We'll post, of course, the recording to this. Hopefully later today. We'll have that posted on the channel for anybody that wasn't able to catch the whole thing or wasn't able to attend in person. Hang in there. You made it through the first real big market dip that we've had in over a year in July and August. We'll see how things pan out, but we're optimistic about the end of 2024 closing out strong. But we'll be back with more updates for you soon. Hope you have a good rest of your week. See you, everyone.